So let's move to the next question. Mr. Ram Gopal invested rupees 8,000 in 7% shares on rupees 100 shares at rupees 80. After a year, he sold these shares at rupees 75 each. Invested the proceed, including his dividend, in 18% on rupees 25 shares at rupees 41. And then there are questions which are asked. See, this question is a bit complicated. The next question is again complicated. If you have understood questions, the first three questions that I've discussed, then of course you'll be able to understand these questions. But this is a level 3 problem, and in all these problems, you'll have to go step by step. So the first thing is he has invested 8,000 on rupees 100 shares at rupees 80. So what does this mean? This would be the dividend that we are clear. Rupees 100 share. So this would be the face value. This would be the face value. And at rupees 80. So this would be the market value. So the share's face value is rupees 100. It is trading at rupees 80. So it is being offered at a discount. Now, what information do we get here? He has invested 8,000 and the market, he has invested a total of rupees 8,000 and each share market value is rupees 80. What this implies is that we understand that Mr. Ram Gopal would have bought 100 shares. I hope this is clear. The first question is his dividend for the first year. So what would be the dividend? See, these are the number of shares that he has. 100 shares he has bought. Now, for each, he'll be getting a dividend of 7%. And what is the face value? The face value is rupees 100. So we'll have to calculate 100 into 100 into 7%. So Mr. Ram Gopal would be getting rupees 700 as the dividend. I hope this is clear. So 100 shares he has bought. Let me check my solutions also. So 100 shares, yes, that is correct. Dividend is rupees 700. Yeah, it is correct. Now, what did he did after that? After a year, he sold these shares at rupees 75 each. So 100 shares, what he did was he sold at 75 each. Okay. And invested the proceeds including his dividend. So I'll have to include this 700 rupees dividend also in the sale proceeds. The sale proceed is rupees 7,500. I add rupees 700. So Mr. Ram Gopal would have got rupees 8,200. I hope this is making sense. Let us look at the question again. See, he invested rupees 8,000 and on rupees 100 shares at rupees 80. So first thing that you need to understand is that rupees 100, what this implies is that this is the face value. The face value is only used to calculate the dividend. That is what we did here. To calculate the dividend, we use face value. For calculating the number of shares, what we need to do is his investment upon the market value of each share. So this 100 is the number of shares that he has bought. I hope this is clear. So these 100 shares each share got a dividend of 7% and the dividend would be on the face value. So we calculated the dividend. Now in 1 year, he sold the share. When he sold the share, he got 7,500 rupees. How did he get 7,500 rupees? 100 shares were there, 75 each he sold, so 7,500. Plus there was a dividend also that he had got. So now his sales proceeds. I hope you are clear till here. His total sales proceeds, the amount that he has received after the sales is 8,200 rupees. I hope it is clear till here. Okay. His annual income in the second year. Okay, this will take some time. Okay. So till here we are clear. Okay, let me erase this and so that we can proceed. Okay. So what happens afterwards? And invested the proceeds in 18% on rupees 25 shares at rupees 41. So again, he invested in some other company whose face value was rupees 25 and the market value was rupees 41. In some other company B, he invested. The face value of that company B was rupees 25 and it was being sold at rupees 41. Now, how much amount does Mr. Ramgopal has? Mr. Ramgopal has 8,200 rupees. For 8,200 rupees, he would have, this is the amount, this is the market value of the share. So he would have got 200 shares of company B. See, 8,200 he got from the company A. Now, from 8,200 rupees, he is buying shares whose of company B, whose each share market value is rupees 41. So 8,200 upon 41 is equal to 200 shares. Now what has happened is, what I'll do is, I'll erase all of this. I will just keep the actually I don't need anything for company A now. Okay, so for company B, I'll write it like this. Company B, how many shares do I have? For company B, I have 200 shares. Okay, nice. So now 8,200 shares, each share is getting a dividend of 18%. Okay, and I understand that the face value of each share is rupees 25. So I'll have to calculate this. So 200 share, this is, we are talking about the company B. So 200 share multiplied by 25, the face value, multiplied by 18%. So this 18% can be written as 18 upon 100. So 25 fours are 4 5s are 50 into 80, 900 rupees. So 900 rupees is the dividend that he has got from company B. So his annual income in the second year as dividend from company B would be 900 rupees. Okay. The percentage increase in his return on the original investment. Okay. See, what is happening is that initially the dividend that he had got from company A was rupees 700. Now, when he has come to company B, the dividend has become rupees 900. So, percentage increase in the return, in his return on his original investment. So, the increase in dividend is rupees 200. Yeah. Now, this increase has to be divided by his initial investment. The initial investment was 8,000 rupees. And this multiplied by 100. And so this will be 20 upon 8 to the 2.5%. So let me check the answer. Yeah, 2.5%. See, this might seem confusing. Let me explain this again. This might seem confusing. See, originally he was getting, when he was invested in a company A, he was getting a dividend of rupees 700. Then he sold the proceed, he invested the dividend also in company B. From company B, he got a dividend of 900. So what is the increase in dividend? The increase of dividend is rupees 200. But you have to read the question clearly. The question says the percentage increase in his return on his original investment. The percentage increase So the percentage increase has to be calculated on the return, because we have to calculate the return on his original investment. So he has been able to generate 200 rupees more, investing 8,000, and that is why the percentage is 2.5%. So hope this is clear. This was a bit complicated question. The next question, this Raju question again is complicated. Let's proceed.